In this video, we're going to look at a trading strategy which uses no indicators, just simple price action, and it can produce win rates of up to 84%. The idea for this strategy came from a video of an interview which I was watching of a very experienced trader called Perry Kaufman. He says that he's been using this trading strategy, which he calls the 3-day trade strategy. He says he's been using it and it's been working for over 50 years. I'm not sure if he trades Forex, but it's the Forex markets which I'm going to be testing the strategy on today. And I'm going to test 14 Forex pairs using data which goes back over 15 years. I'm going to test Perry's original rules, including his original exits. And then I'm going to add in some of my own exits and test them separately to see which works best and on which market. So let's first go and have a look at the rules for this 3-day trade strategy. Okay, first off, let's look at an example. You'll notice that on this bar chart, and this is the daily chart by the way, you've noticed that I've highlighted the closing prices in a bolder red. So the trade setup, we're looking for 3 down closes or 3 up closes. And in this example, we're looking for 3 down closes, which we've got. So this close here was less than the previous close. So that's 1 down close. This one is less than that one. So that's 2 down closes. And then we've got a 3rd down close. When we get 3 down closes, we buy on the close of that bar or that session. For short trades, we want to do the opposite. We want to be looking for 3 up closes. Okay, so we're only looking at one piece of information. We're just looking at the closing price on the daily bars. So trade entries, as we've seen, 3 down closes, then we buy on the close of that bar. If we see 3 up closes, we sell short on the close of that bar. And exits, number 1, which is the original exit, or the one that Perry Kaufman suggested in the video, and he uses this mainly on equities, I think. He suggests if we're in a long trade, then we sell after 2 days of being in the trade. But if we're in a short trade, we will cover or exit after just 1 day in the trade. And that's because generally equities have an upward bias, so we can hold on to a long trade a little bit longer than we can with a short trade. Looking back at the example, we can see that we've got our 2-day exit here. So we've bought after 3 down closes, and then we've held for 1 day, 2 days, and then we've exited on the close of the 2nd day. But we're also going to test out some more exits, and these are going to be equal for both long and short trades. We're going to test an equal 2 days in the trade, 3 days in the trade, and 4 days in the trade. And the third, which is the bailout exit or first profitable close, which simply means we stay in the trade until we're in profit, or we get an entry to go either long or short in the opposite direction, which we're already in. So at the end of each bar, or at the end of each day in this case, if we're in profit, we exit the trade. If we're not in profit, we leave the trade open and have a look at the close of the next bar. If after the next bar we're in profit, we exit. If not, we leave the trade running, and so on. So they're the various exits which we're going to test in this study. You can see from the example that we've just seen that it's really easy to find the setups for this trade and then place the trade. I said that we're entering and exiting on the close, but in reality, I would enter and exit 5 or 10 minutes before the end of the session. So that would be 16:50 or 16:55-ish Eastern Standard Time. In the video where we saw Perry demonstrate this strategy, he suggested this strategy works best on noisy markets, markets like the S&P 500, where we know that short-term mean reversion strategies work quite well. So I expect the same for the Forex markets. Not all the Forex markets move the same way. I expect markets such as pound-dollar, which reverses price very often, to work best with this strategy. But we shall see. One last thing I want to mention before we look at the results is Perry suggested a profit target. Now, I haven't tested any profit targets, but he suggested using a profit target and using that based on a multiple of the average true range. So pretty standard stuff there. Okay, let's go and have a look at the results where I've used MultiCharts platform and I've used data from Oanda. Okay, we've got some short trade examples on the chart here of pound USD, and at the moment I've got the exits set to just 1 day for the shorts and 2 days for the long. You can see that we've got our entry signal here, we've got our 3 up closes, and then we've just held for 1 day and we've exited. Again, we've got 1, 2, 3 up closes, we've entered a short, held just for 1 day. Let's have a look at some other trades. Here's a long trade. we've got the 3 down closes, we enter long, and then we exit after 2 days, which simultaneously we actually got a short trade entry as well. Let's have a look at a clearer trade for the long. Here you go. We've got our 3 down closes, we enter long here, and we've held just for 2 days. And I can adjust that exit. Let's adjust it for bars in long, 4 days, bars in short, 4 days. Long trade, 1, 2, 3, 4, and we exit. We've got our 3 up closes, we go short, 1, 2, 3, 4, and we exit. And we can also switch on the first profitable close, or the bailout exit. Switch that on. And now we can see we've gone short here. This bar here was the next bar where we weren't in profit, but in the following bar we were in profit, so we exited. This bar here, we were in a trade a long time before we actually got out of the trade, and we got out of the trade for a long trade for the 3 down closes. That was a stop and reverse trade, so that would have been a pretty big losing trade. Here's some other trades, some long trades. We held the trade just for 2 days until we were in profit here. 2 days and we were in profit here. Here's a short trade we held for quite a few days until we were finally in profit and we exited. So that's the bailout exit. Now let's go over to the portfolio where I test the 14 pairs. And here's the pairs here, 14 of them, all on the daily time frame, or 1440 minutes. At the moment I've got the exit set to 2 bars long trade and 1 bar for the short trade exit, like Perry's original ones, which he suggested for indices. But let's see how they work on the Forex markets. First of all, let's have a look at the performance of the complete portfolio of the 14 pairs. So, a decent uptrend in equity curve across all of them, but looking at them individually, we can see that they were all profitable apart from dollar Swiss franc. We'll have a quick look through the equity curves. So, Australian dollar, US dollar, not that great, is it? Canadian, Japanese yen, not great. Euro pound, that's better, trending in the right direction. What's the average trade value like? These results, by the way, are all in pips rather than their currency. So the average trade is 2.6 pips. So that's actually far too small by the time we've paid some trading costs. Euro yen, not great. Euro New Zealand, not great. Euro dollar, that's a better curve. The average trade value is only 4.2 pips. Again, too small really. Pound Canadian dollar, reasonable equity curve. Pound Japanese yen, that's not too bad. What's the average trade like? 8 pips, better, but probably not good enough to warrant trading. Pound US dollar, not too bad. New Zealand Canadian, that's not bad. What's the average trade like on that? Only 4 pips, so again, really too small by the time we've paid some costs. New Zealand US dollar, very small average trade. I expect the equity curve's not very good. No, it's not very good. US dollar Canadian, equity curve's not bad, better recently. Average trade's only 4.2 pips, so still pretty low. US dollar Swiss franc we know is losing, and US dollar Japanese yen has not such a great equity curve. Now, I went ahead and adjusted the exits to a 2-day hold for both long and short trades, and then also adjusted it for a 3-day hold for both and a 4-day hold for both. And I can tell you that nothing really jumped out at me. Everything had a fairly small average trade value. I did see some decent consistency though on US dollar, Canadian dollar. If you remember here, we've got an okay equity curve, and the equity curve was pretty reasonable using the fixed 2-day, 3-day and the 4-day exit. The average trade did get slightly bigger as we held on for a little bit longer. But out of all those tests, I didn't find anything which was really exciting, something that we could use straight away. Next, we're going to have a look at the results using the final exit, which is the bailout exit. And this exit actually produces the best results. And here's where we see some win rates of well over 80%. But just before we do that, I want to offer you free access to 3 more trading strategies, which I've put together in my 22-page Beat the Markets strategy guidebook. All you need to do is find the link in the description down below to get free access today. And if you want even more trading strategies and some demonstrations of how to use them, maximising your profits but reducing your drawdowns, then you should probably enrol in my popular trading course. You can find more about how the course will benefit you if you use the link again in the description down below. Okay, let's see how this final bailout exit tested out. So now I'll adjust the exit and I'll switch on the bailout exit and then run the backtest. So here's all the individual markets. Let's look at the complete portfolio to start with. 46,000 pips with a pretty nice equity curve across the whole portfolio. But let's look at the individual markets. Again, we got 13 out of the 14 pairs all profitable, which is good. Australian dollar, US dollar, equity curve's not great. Canadian, Japanese yen, not great. Euro pound, that's not bad, and the equity curve wasn't bad with the other exits either. And we got a higher average trade now, 8.7 pips. Euro yen, average trade's too low at 4 pips, and the equity curve's not very good. Euro New Zealand is losing. Euro dollar, equity curve's alright, not the best. Average trade 6.8 pips, not that great. Pound Canadian dollar, equity curves not too bad. Pound Japanese yen was working very well, but seems to have gone pretty flat in the recent part of the study. Pound US dollar, equity curves pretty good. And the average trade is 12 pips. So that's something that probably is worth using. By the time we've paid some trading costs, we're still going to be making money. This strategy on this market is still going to have an edge. New Zealand, Canadian, small average trade. What's the equity curve like? Not that great. New Zealand, US, not very good. US dollar, Canadian dollar, that's a pretty good equity curve. What's the average trade like? Average trade of 18 pips, so definitely something which is going to make money. It's still going to have an edge after we've paid some trading costs. So that's one of the best markets yet. US dollar, Swiss franc, not that great equity curve. US dollar, Japanese yen with a bad equity curve. So the standout pairs here were pound, US dollar, and US dollar, Canadian dollar. So that's the results of the 3-day trading strategy using various exits. And although the signals do work quite well on most markets, the edges just aren't quite big enough to overcome trading costs. There are some exceptions, however. Pound dollar and dollar Canadian dollar, especially using the bailout exit, did produce some decent results. We saw larger average trades and the win rates of over 80%. So the edge on these two markets is definitely something we can use. And don't forget, you might want to include a profit target. That could increase the edge further still. And I expect most of you will want to use a stop loss. And while I haven't tested the stop loss on this particular strategy yet, I know from experience that on this type of strategy, generally a stop loss will reduce the performance ever so slightly. For those of you who are interested in the original video which I watched, where I got this idea from, interviewing Perry Kaufman, I'll leave the link to that video as well. It's not my video, but go and have a look at it. There's some very interesting stuff there. I'll leave it so it links to the exact point where in the video he starts talking about this 3-day trade strategy. But the whole video is worth a watch. Anyway, that's all for this video. A short and sweet one this time, but I hope you've enjoyed it and I hope you've learned something. If you have, then please give it a thumbs up. Thanks for watching and staying till the end, and I hope to see you next time on the next video. But until then, this is Jared Goodwin, and thank you.